John Hancock Core High Yield Fund seeks to achieve high current income and appreciation in high yield or below investment grade bonds. But unlike many of our peers, we are focused on controlling the volatility inherent in high yield investing. I think of the fund as looking to be a core play in the high yield category. The fund has a very strong and consistent 3-year track record, and we are honored to have received the Lipper Award for its superior risk-adjusted 3-year performance. It was the top fund in the 3-year category amongst a group of over 450 other high yield funds. The fund has also received a 5-star Morningstar rating. My name is Konstantin Kisnov. I'm the lead portfolio manager for the John Hancock Core High Yield Fund, responsible for all the buy and sell decisions within the fund. I have over 16 years of high yield experience, and I am part of a team looking after the fund. The team lead is Terry Carr, head of our fixed income group. Terry has over 27 years of high yield experience. On a combined basis, our team has over 60 years of high yield experience and is supported by 16 analysts. Our investment process is a very thorough one that is anchored by fundamental credit research and financial analysis. Our approach is a combination of top-down macroeconomic analysis used to identify attractive sectors and bottom-up relative value analysis used to find compelling relative value securities. Diversification guidelines and a multidimensional risk management process govern the portfolio's construction. Our investment team relies mainly on its own proprietary analysis. We will supplement our research with external sources when evaluating specific issues, but it is used more as a check against our own research conclusions. Constant credit monitoring and reevaluation and a focus on risk management helps lower volatility within the portfolio. We are conscious of the overall macroeconomic environment and the effects on the valuation of the portfolio and the high yield asset class in general, and move to protect investor capital in times of market uncertainty. We're positive on high yield bonds for a number of reasons. Economic growth is positive, corporate earnings continue to grow, and corporate America enjoys a comparatively healthy balance sheet. In addition, record new bond supply in 2012 allowed many high yield issuers to refinance at attractive rates, pushing out debt maturities and raising cash. At the same time, default rates are low by historical standards. What's more, if interest rates were to rise, particularly as a result of better than expected economic growth, high yield securities would likely do better than lower yielding, more rate sensitive government bonds. High yield as an asset class remains attractive for diversifying investment portfolios and is complementary to equity holdings while adding higher income. However, risks remain in the form of uncertainty around the debt ceiling negotiations in Washington and ongoing European sovereign debt crisis. So while we're constructive on the high yield market, particularly relative to US Treasury bonds, we believe volatility will likely continue. The fund is a centric or core high yield strategy that aims to maintain the average credit quality roughly in line with the benchmark while taking opportunities to capitalize on mispriced securities. It is focused on providing high income and has a distribution yield above its peer average. The fund's active, risk-averse management lowers volatility and aims to preserve investor capital while focusing on total return. The John Hancock Core High Yield Fund is nimble and has more flexibility to take advantage of opportunities that its larger peers may not be able to participate in due to deal sizes and liquidity constraints.